And joining us now to share his commentary on the day's market performance is Culverwell from Anchor Capital. Sean, thanks so much for your time this afternoon. So traders have been digesting the U.S. private sector employment numbers. The September print, of course, coming in downbeat and showing that employers are hitting pause when it comes to hiring. We saw private payrolls declining 32,000. Is this print enough for the Fed to go off on when it comes to its next meeting, considering that we might not get those U.S. non-farm payrolls?
Yeah, so I would say that it was a big miss. So 32,000 decline, as you said, versus an estimate of a 51,000 gain. But also the August number was revised down by 57,000. So quite negative there. What I will say is historically the ADP numbers haven't been as reliable at assessing the labor market as non-farm payrolls. So you do have to take this read with a pinch of salt because ADP numbers can be volatile month to month. But it also doesn't help that we may not get the non-farm payrolls tomorrow because of this government shutdown. So the market is kind of flying blind at a time when there are questions around the health of the U.S. labor market. But seemingly the market has shrugged it off, as you have seen the bond market again pricing in 2 more rate cuts from the Fed this year.
And let's move over to some company news. In South Korea, chip makers SK Hynix and Samsung sealing a deal with OpenAI. Markets really liking the move, but what have you made of it, considering that the Trump administration has been pushing for more domestic manufacturing?
So I think firstly, it just shows that everyone's just trying to get a piece of the AI data center build out. And now it looks like the Koreans are getting their share with this new partnership for the Stargate Alliance. I think together their market caps went up 37 billion. And the reason is they have been worried about the high bandwidth memory chip prices falling next year on intensifying competition. So these are the places SK Hynix and Samsung play in. But I think such worries will be easily resolved through this partnership. And then also Stargate is a key project that is led by Trump. So there is a possibility that the partnership will have a positive impact on South Korea's negotiations with the US. So quite positive there.
I'd also like to get your thoughts around the interest around these memory chip makers as demand for AI infrastructure increases.
Yeah, so SK Hynix, Samsung, and Micron are the 3 players in that area, and you've seen their share prices do exceptionally well. Most of the market's focus has been on the GPUs, so NVIDIA and AMD, and the huge demand you're seeing going into those. But high bandwidth memory chips are also very much required for these data center build-outs. But the memory market versus the GPU market can be a lot more cyclical. So it's a harder sector to assess from a fundamental point of view, but this is a positive.
All right, moving over to the pharma sector, a drug pricing deal between Pfizer and the Trump administration has set off a surge in the sector. Now, these stocks haven't been doing well when you look at them year to date. I was looking at the S&P 500 Pharmaceuticals Industry Group Index, which is down over 3%. I guess the big question is, with the rally we're seeing now, is it sustainable, Sean?
I do think it is. So the global, not just the US, the global healthcare sector has been one of the worst performing sectors since Trump was elected. And that's because, as you said, he's been very vocal about drug pricing in the US. He cut budgets at the FDA and the CDC, and then he also put on those 100% tariffs on branded drug imports into the US. But on Tuesday, he launched this Trump RX, which is a direct-to-consumer drug ordering service that offers medications at prices aligned with global benchmarks. But then also companies participating on this Trump RX are eligible for tariff reliefs. But I would say the real driver behind this rally we're seeing is that the discounted drugs featured on this Trump RX are those already covered under the Medicaid program. And since Medicaid already secures steep discounts and rebates from the drug pharma companies, sometimes exceeding 80%, I think this additional impact on the drug manufacturers is relatively limited. So this was a much better outcome for the sector, and it does remove an overhang that has been weighing on valuations. So even though in certain companies growth has been exceptional, it's valuations that have taken quite a beating.
And I've noted that over the past few days, the DAX has been doing pretty well. And I'm sure that's on the back of that, the rally in healthcare stocks as well, right?
Yeah, correct. And then also you'll see Novo Nordisk, which is also a big part of the European index. That's also had a good couple days now.
All right, sticking in Europe, we just heard from Prosus Naspers completing the Just Eat takeaway deal. That deal, of course, worth $83 billion, billion rands. We've known of the deal, so I'd like to get your analysis on I guess Prosus's strategy to try and move away a bit from Tencent and make investors see value in their other investments, particularly in Europe, right? This is not the only acquisition they've made in Europe. We've seen a strong push there, even though fundamentals for Europe aren't great as well.
Yeah, so I'd say this acquisition would push Prosus to the fourth largest food delivery company in the world. Meituan, DoorDash, and Uber being the other three big players. And the thing that all three have in common is scale. And Prosus needs scale to make this an economically viable model, specifically food delivery. I do like the deal, given Fabrizio Bloisi's background in food delivery, with him running iFood previously. He knows what the right product looks like in this space, and he has communicated that the Just Eat product and customer experience was not good enough. So I'm sure he can make a difference there. He can improve the platform, the technology, and get the business to where it needs to be, but then also reap the benefits of scale. The business is operating in 17 international markets and has about 60 million customers, but they can really grow that going forward.
All right, let's hit pause on the conversation, Sean. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
SA Inc. stocks have been among the weakest performers on the market this year. And so one of the most unloved is Bidvest. If I look at the Bidvest stock price relative to the stock market since it split from Bidcore, Bidvest at the moment in that chart is trading at its lowest level since 2016. And if you look at other multiples, it's trading on a P of about 12 compared to its historic median of about 15. And in terms of dividend yield, it's trading on dividend yield just over 4 compared to what's typical for Bidvest, about a 3% level. So valuation, it's really attractive. Looking at the business, we know Bidvest is well diversified. It is a pretty resilient business, really good management with strong capital discipline. Unfortunately, it's exposed to the really weak South African environment, but it has opportunities to make acquisitions outside of South Africa in hygiene and facilities management.
The company itself is called Birkenstock, and a lot of investors or would-be investors will say, well, they sell sandals. I mean, what's so interesting about sandals? But Birkenstock in particular is almost like an anti-status symbol, and that in itself has made it a status symbol. Very much focused on function over form. Once you own and love a pair of Birkies, you wear it for 10 years and you wouldn't want to wear another sandal again. And it's almost become like a bit of a fashion statement as well to wear Birkenstocks from a casual wear perspective. A lot of collabs also with the biggest fashion houses in Europe and the US. So it really isn't just a sandal. There's a lot of white space still for Birkenstock. So they're quite big in Europe and the US, but a lot of avenues for growth in terms of Asia, the Asia Pacific market specifically, as well as the rest of the world. They only have 70 retail stores globally.
Wow.
So I think that there's still a lot of scope for growth there. Revenue over the last 3 years has grown by about 20% a year. It's expected to grow in the high teens over the next 3 or 4 years as well.
So, Victor, going with Bidvest and Chantal betting on Birkenstock. What are your thoughts on those counters?
Yeah, so starting with Bidvest, Bidvest is a business, it's a great business and it's trading at its lowest valuation since unbundling Bidcorp. We do remain on the sideline for two main reasons. One, despite their offshore push, the business is still highly elastic to SA GDP growth. So between 2019 and 2025, earnings have only grown at a compound annual growth rate of 4.5%. Secondly, there is question marks around the latest acquisition of Citron Hygiene. Management's communication on the multiple paid for that business was opaque, and the acquisition marks Bidvest's first entry into the US, which is the most competitive hygiene market in the world. So execution risk is very real there. Having said all that, if we do see some good execution on the offshore services front, and we get a pickup in domestic activity, Bidvest would certainly start to look attractive. Birkenstock, not a company I know well. I know the product well, and you'll like.
Do you own Birkenstock sandals?
I do. Yeah, wear them most summer weekends, but it's not a company we would own, just on the basis that we don't think it has competitive advantage that are enduring enough or haven't been proven yet. A large portion of its brand strength is in its core models, so the Arizona or the Madrid. So if customer tastes shift, that concentration becomes a big vulnerability to them. Also, they've got a heavy reliance. I think Chantal mentioned how many retail stores they have. So they've got a heavy reliance on wholesale, which gives them less control over margins, markdowns, and inventory. So a great product, but not the type of company we look for.
All right, what company are you looking at? Where are you seeing opportunity now? Let's get into your stock pick.
So in line with our conversation on healthcare, my stock pick is Eli Lilly. I think there's been some unsubstantiated market concerns that have led to some pressure on the group's valuation multiple. It is the best-in-class GLP-1 pharma company with its market-leading molecule tirzepatide, or commonly known as Mounjaro. Unlike Novo Nordisk, which is their main competitor, their patent protection extends to the mid-2030s. And even if generic competition comes to the market, generic manufacturers cannot match the incumbent's distribution presence. Also looking nearer term, I think there are multiple catalysts on the horizon, one of which we just saw with Trump's better-than-expected drug pricing intervention. Lilly are also launching their oral GLP-1 orforglipron in 2026. It'll be very cheap and very easy to manufacture, so it sort of expands the overall market for these GLP-1 products. So we think the valuation is very reasonable given the returns on capital that Lilly generates, but also just the expected growth that we're expecting from the business over the next couple of years.
All right, let's leave it there. Sean, thanks so much for your time and taking us through trade this afternoon. Now, that was Sean Culverwell from Anchor Capital.